Assalamualaikum warahmatullahi wabarakatuh. My name is Kpmsi, SIB 240700052, and I am student of business at Business Finance. And today we are going to do our assignment. Our assignment is consisting of topic 2 ratio analysis. So we have two companies that we are going to compare. First is the Farm Fresh and second is the Dutch Lady. So we are going to compare them using the ratio analysis by identifying the ratio and their asset management and every single thing that they consisting in their profit loss statement and financial statement. From that we can identify their performance and the efficiency of their production, of their how they manage their asset, how efficiency the usage of their asset. And from then Farm Fresh and Dutch Lady, we can compare and identify them which are much more better. So next we are continuing to Muhammad Fakri bin Musa to talk more about this agenda. Thank you very much.
Assalamualaikum. My name is Muhammad Fakri bin Musa and I will be take a part of acknowledgement and company background for my group. So first of all, we would like to express our sincere gratitude to our lecturer, Puan Yasmin binti Ishaq, for her continuous guidance, support and valuable feedback throughout the completion of this assignment for the subject Business Finance. Her explanation and insight have enhanced our understanding of financial concepts, particularly in financial ratio analysis and performance evaluation. We will also like to extend our appreciation to College Professional Mara for providing a conducive learning environment and the necessary facilities that support us in completing this assignment successfully. The academic resources and support provided by the institution were very helpful throughout the research and analysis process. In addition, we would like to thank all group members for their cooperation, commitment and teamwork. The successful completion of this assignment will not have been possible without the contribution, effort and dedication of each member. The group members involved in this assignment are Huzaifah Hanzala bin Syafil Ikhwan, Zahin Ifran bin Muhammad Yusri, and me, Muhammad Fakri bin Musa, and also Muhammad Hazrin Zain bin Khairi Nizam. Working together as a team has allowed us to share ideas, improve our understanding and complete this assignment efficiently and effectively. Lastly, we would like to acknowledge all source and of information used in this assignment, including company annual reports, textbooks, academic articles, and online financial resources, which have contributed significantly to the completion of the quality this report. So next, I will explain about company background. So for Dutch Lady Milk Industries Berhad is one of the oldest and most established dairy companies in Malaysia. The company has been operating in the Malaysian market for more than 16 years, and it is a subsidiary of Royal Frenchland Compagnie, which is a leading global dairy cooperative based in the Netherlands. Dutch Lady is mainly involved in the manufacturing and distribution of a wide range of dairy and nutrient products, including UHT milk, fresh milk, growing up milk and infant formula. Over the years, Dutch Lady has built a strong brand reputation, a wide distribution network across Malaysia. In recent years, the company has focused on improving operational efficiency, product quality and sustainability practice for the financial year ended 31st December 2024. Dutch Lady recorded an increase in net profit despite relatively strategies and operational efficiency. In addition, the company invests in a new advanced manufacturing facility at Hampstead, Negeri Sembilan, to support long-term productivity and innovation. So, I will move to background history of Farm Fresh. So, Farm Fresh Berhad is a rapid growing Malaysian dairy company established with a focus on producing high quality fresh meat and dairy products. The company operates an integrated business model that covers dairy farming, meat processing and product distribution. Farm Fresh is well known for its fresh meat, UHT meat, ice cream, yogurt and plant-based dairy alternative. The company also supplies dairy product to hotels, restaurants, and also cafe in Malaysia. FarmFresh has experienced through growth in recent years due to aggressive expansion, product innovation, and increased consumer demand for fresh and locally produced dairy product. For the financial year ended 31st March 2024, the company achieved a significant increase in revenue and net profit compared to the previous year. This strong performance was supported by successfully new product launch, expansions of distribution channels, and better utilization of production capacity. Overall, FarmFresh is positioned as a high-growth company with strong market potential in the Malaysian dairy industry. So that's all from me. I will move and I will pass to my next member.
My name is Muhammad Hazrin Zaim bin Khairin Nizam. So, next I will explain the performance evaluation of FarmFresh and Dash Lady based on liquidity, efficiency, and debt management, and also profitability. So, for liquidity performance, in terms of liquidity, FarmFresh show a very strong position, which is the current ratio for FarmFresh is 2.93, which means the company has more than enough current asset to cover its short-term liabilities. This provides high financial safety, especially during expansion. So, on the other hand, Dash Lady has a current rate of 0.84, which is, although this is below 1, it is acceptable for a mature company. This shows Dash Lady manage its working capital efficiency but relies heavily on fast inventory turnover. For asset management efficiency, Dash Lady is much more efficient in using its asset. The total asset turnover for Dash Lady is 1.35 times, while FarmFresh only records 0.63 times. This means Dash Lady generates more sales from each ringgit invested in sale. In addition, Dash Lady also collect its receivable faster within 30 days. So compared to FarmFresh, which is take only 70 days. So this indicates strong market power and better cash flow management. So for the debt management, Dash Lady has a higher debt ratio of 53%, but its time interest earn ratio is very strong at 19.56 times. So this shows that Dash Lady can easily pay its interest expenses. Then FarmFresh has a lower debt ratio of 46% only, but its interest coverage is only 5.04 times. This reflects the impact of expansion loan, which is increases financial pressure. So the profitability, FarmFresh record a higher net profit margin of 7.84, which is compared to Dash Lady at 6.68%. This means FarmFresh earns more profit per unit of sale. However, Dash Lady also deliver a higher return of equity of 19.26%, while FarmFresh record only 9.53%. This show Dash Lady is more difficult. This show Dash Lady is more efficient, but in generating return for the shareholders. So the conclusion here, we can conclude the FarmFresh focus on growth and financial safety, while for Dash Lady, they focus on efficiency and also shareholder value. So let's move on to the part 4, which is initiative actions. So based on the performance evaluations, there are 4 initiative actions that FarmFresh can take to improve its financial performance. So the first initiative, they can improve collection period. FarmFresh has a long average collection period of 78 days. The company should introduce early payment incentive, which is such as a small discount for customer who pay yearly. This will improve cash flow and also reduce reliance on short-term financing. So the second initiative here, which is debt refinancing. So as a Farm Fresh continue to expand, it should refinance short-term debt into long-term fixed rate financing. So this will reduce the interest risk and also stabilize the profit margins. So the third initiative is a focus on high margin product, which is Farm Fresh should focus more on high margin product such as an ice cream and milk powder. So such as an ice cream or milk powder. This strategy can also increase return on equity without increasing total asset. And the last initiative, which is initiative 4, improve asset utilization. So to improve asset turnover, Farm Fresh should fully utilize its new production facilities by expanding contribution through its home dealer network. This will increase sale while keeping costs low. And so all the initiative that I give. This initiative will help Farm Fresh to strengthen the cash flow, improve efficiency, and also support sustainable long-term growth.
Assalamualaikum, and I'm Zahin Irfan, and today I will be presenting about the question 2 of the report, which is the competitive analysis between the both of the companies, Farm Fresh and also Dutch Lady, and the opinion regarding the performance of both of the companies. So the first question being the competitive analysis of the both of the companies. Let's start with the safety net liquidity. There is a huge contrast here. Farm Fresh is playing it very safe. They have a current ratio of 2.93, meaning that they have nearly 3 ringgit in cash and short-term assets for every ringgit that they owe. So this massive buffer is intentional. They need that cash ready for their expansion in Philippines and to handle swings in milk prices. On the flip side, which is the Dutch Lady, of course, runs a lean machine with a ratio of 0.84. Usually a ratio under 1 is a red flag, but for a mature company it just shows that they don't like letting cash sit idle. However, with a quick ratio of 0.36, they are very dependent on daily sales to keep the lights on. So the point 2 being operational efficiency. When we look at how they use their assets, Dutch Lady is the clear winner. Their total asset turnover is 1.35, which is the double of Farm Fresh 0.63. Dutch Lady is essentially squeezing twice as much revenue out of every ringgit invested. So Dutch Lady also collects payment in just 30 days, while Farm Fresh has to wait 78 days. This suggests that Dutch Lady has significant market power over its distributors, allowing them to get paid faster and also reinvest that cash immediately. So for the third point is debt and also growth strategy. Dutch Lady actually has a higher debt ratio at 53%, but their ability to pay it off is elite. Their time interest earned is 19.56, meaning that they can cover their interest cost nearly 20 times over. Farm Fresh has a lower debt ratio, 46%, but their interest coverage is much tighter at 5.04 because they are borrowing to build brand new farms that aren't fully profitable yet. Their debt feels heavier on their bottom line. So the final point being the profitability and also verdict. Let's look at the bottom line. Farm Fresh actually has the better net profit margin at 7.84%. This suggests that their farm to shelf model is very effective at keeping the cost down. However, Dutch Lady wins on return on equity, ROE, hitting a massive of 19.26% compared to Farm Fresh's 9.53%. If you want a company that is safe and growing fast, Farm Fresh is the pick. But if you want a matured, high-efficiency machine that delivers the best returns to shareholders, Dutch Lady is the master of doing more with less. And for the next question is our opinion regarding the performance of Farm Fresh and Dutch Lady. So what is the big picture takeaway here? Based on our analysis, we've reached 4 main conclusions. The first being safety versus efficiency, the second being market dominance, the third is growth phase, and also the last being shareholder returns. So the first point is safety versus efficiency. It's clear that these two companies are in a different life stages. FarmFresh is playing a safety first game, keeping a massive liquidity buffer of 3 ringgit for every 1 ringgit owed to protect its growth. However, Dutch Lady is comfortable operating on a razor-thin margin of safety, 0.84, because they want to maximize every cent of cash that they have. So the next being market dominance. There is a real power gap in how they collect their money. Dutch Lady's ability to get paid in just 30 days shows that Dutch Lady have superior market power over their distributors. However, FarmFresh waiting 78 days is likely using generous credit terms to buy their way into the market and fuel their rapid growth. The third is growth phase. We can still see that FarmFresh is still in a heavy asset phase. Their lower asset turnover, which is 0.63, is simply because that they are still building the farms and factories that haven't reached the full potential. Full production. Dutch Lady is a matured machine. They are already generating double the sales from its existing assets. Last but not least, if we are an investor, Dutch Lady is currently the winner in capital efficiency. Even though FarmFresh has a slightly better profit margin, Dutch Lady delivers a much higher return on equity, 19.26% compared to FarmFresh, 9.53%, by doing significant more with less capital. So that concludes our competitive analysis for both of the companies, FarmFresh and also Dutch Lady. We believe that both companies are performing very well within their respective strategies, but their financial profiles reflect very different priorities. Thank you for your time, Madam Yasmin, and that's all from us. Thank you very much.